I think we all want the uncertainty around trade to go away. As one client I spoke to recently, we need the noise to die down so the market can be driven by fundamentals. Unfortunately, I don't think that's happening anytime soon.
Are the fundamentals changing, Eric, as the tariffs ramp up?
Yeah, certainly they are. The importance of global trade, even here for the U.S., we are the world's second largest exporter. Let's not forget that. One thing that investors, I think, are missing is that certainly there's a downside, but there is a potential upside. If we make it through, we could actually come out on the other side better in a less tariff sort of world, in a more free trade world than we're in right now. And I think investors are maybe missing that possibility.
There's the other argument that we're in a pattern. It's happened for nearly 10 times where the Fed's in a tightening cycle and multiples compress. Yeah. And that's happening again.
Yeah, I mean, I think that's one of the big things that's going on. And you can see that in terms of how the multiples have acted themselves. If you look at small cap multiples, they compressed last year while the Fed was tightening. But it's been very consistent. The last 3 times we've had a sustained hiking cycle, you've seen big contraction in the PE. Bottom line, it's plain and simple.
All right, so where does that lead your target?
So we're still at 28.90 for this year. We have actually boosted our earnings estimate a little bit, but the number we've got now says about half the contraction that you typically see in one of these hiking cycles is going to happen this year. And I think, there's room to debate that 50%, but bottom line, we think earnings are going to be good, but markets aren't going to be quite as good.
It seems like as we see earnings come in a few weeks, maybe last quarter is somewhat instructive, where it supported the market in certain areas, it got sectors moving, but in general it was neutralized by this multiple compression. I wonder, though, if we're going to finally be able to tell if there's going to be a corporate capital spending ramp. Because that seems to be one of the open questions right now. We got the repatriation, we got the tax cuts, we know about the buybacks. Is there anything that's going to be really a growth accelerant in what companies are doing?
Sure, that corporate capital spend is so closely tied to confidence. And as Lori was mentioning, as we deal with these issues of trade, it just continues to weigh on confidence. From our perspective, we just did an investor sentiment survey. Investor sentiment is high, but not exuberant. Investors have this tremendous wall of worry, which from a contrarian standpoint is a good thing, and that is actually contributing to these compressed multiples. That's a positive environment for investors.
Yeah, the AAII survey of sentiment came out yesterday. Pessimism above 40%. Is that pessimistic enough that signals buy time?
Maybe not buy time, but it definitely signals as we're heading off to the Independence Day week, don't be too worried.
In a week or two, we're going to have earnings to chew on.
Yeah.
And there's a big debate about whether or not they're going to be digested the way they were in Q1, where it's sort of like we priced all this in, 20% is great, but we were ready for it, or whether there's still room for surprise. What do you think the answer is?
Well, look, I think people are going to be focused on the underlying fundamentals. So how are revenues coming in? Margins are huge. I mean, we basically saw flat margins in the first quarter. A lot of people are still looking for expansion. If you don't get that, people are going to be disappointed.
Specifically technology, I'm thinking about, Eric, because despite all the twists and turns over the quarter, the Nasdaq's headed for its 8th positive quarter in a row, and the bull thesis there is earnings growth.
Yes, technology is doing great, and also technology plays into this growing labor shortage issue that we're facing as a country as well. And so while technology's had a great run, it's hard
to... You're saying stick with it?
Yeah, I mean, don't go crazy, but certainly don't underweight technology. There could be some more room to run.
Yeah, I mean, if I could just jump in here, we absolutely disagree, and we wrote about that this morning. We've been underweight technology. We think it's crowded, expensive, and I really worry heading into this reporting season, you're going to lose that earnings support. This is one of the most internationally exposed sectors. Earnings revisions tend to go down when the dollar strengthens. You've seen some chatter about that over the past few weeks. I would absolutely be taking profits on this sector while you still can.
Certainly Oracle's guidance points to that. We'll see.
Guys, thank you.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.